What is going on, everybody? It is January 18th, 2024, Thursday, day log episode over NQ, and the live stream, kind of just a recap if you weren't there to attend. Going off of, I guess, yesterday, the daily log and what we were looking at, I was still remaining bullish, and I was still keying off the idea that we're going to gravitate towards the relative equal highs, which I will go down in lower time frames and highlight. But I think that's a huge main takeaway, at least from myself this week, is sticking to one side of your analysis, especially on the higher time frame, until you're completely proven wrong. Because if you can constantly go back and forth in your analysis, then obviously it's very hard to stay consistent throughout the week on predicting what price is going to do. For me, if I'm looking at one side, I have to be clearly proven wrong with enough evidence that my idea is no longer valid. And to me in here yesterday, when you heard me speaking, there wasn't enough information for me to call that idea invalid in terms of being bullish. There just wasn't enough evidence for me to get into the market. So there's a distinguish between those two. If we look on the daily chart, we're about to take out the buy side liquidity above this high here. And if you go back through the last daily logs and the last 2 weeks, even the beginning of this year, I've constantly referred back to the higher time frames, the monthly, the weekly, the daily, and I've remained bullish for that particular reason because the higher time frames are the parent. Everything else will be subordinate to the higher time frames, right? It's the parent. So everything else will fall in line with it. And that's why I place a lot of emphasis on the higher time frames and paying attention to the narrative rather than just looking at a model or a entry pattern. Because if you lose sight of narrative in the higher time frames, it makes trading so much more difficult. And if you're able to see this very clearly, the narrative and the higher time frames, then plugging in your model is super easy. So just to recap, I think I've already went over this once this week already. I basically do it every single week. But the monthly time frame, we've reacted off of this inversion for value gap, which is setting the low of the month, taking in power of 3, open high, low close. So we opened, set the low, and to me, this month we're going to want to seek the buy side liquidity, which is resting above this old high there. So this would be creating all-time highs on NASDAQ. And even from the beginning of this year, I've been screaming that we're going to create all-time highs this year. I'm fairly certain in it. It hasn't been easy to position myself into the market. And this week I've only taken one trade so far in the live, which for some people is too little, and they don't understand the discipline and the patience that requires. And for me, I've created my own model through patience and time to just wait for the certain criteria to form for me to enter into the market. And you can see there's a lot of times where you will get a drawn liquidity correct, your bias will be correct, but the market doesn't allow you to enter into the market. Your model didn't print, your entry pattern didn't form. Now, does that mean that your entry pattern is broken? Does that mean that you should change it and see if something else works? Well, if it consistently keeps happening to you and you can't seem to find your model a lot, but you keep getting the draw and liquidity correct, maybe explore different options, maybe explore a different PD array, a different model. But to me, I know my model, no matter what, every single model, you're going to miss some moves. It is part of the process, unfortunately, where you're going to see where price is going and something just, you can't get into the market. And that's part of discipline and rules, and you have to follow it. It's the cold, harsh reality of trading, and discipline is a bitch sometimes. It sucks. But it pays you and rewards you if you follow it and you stay consistent with it. So what I was marking up here is the fair value gap in here. I would like to see by the end of the week if we can get above it and close it. So tomorrow, if we can get above it and close above it, and that would act as an inversion. I can see this down close candle envisioning if we close above it as a bullish order block. And I think the rest of the month and going into February, I think this pool of liquidity is really clear to me. And I've been stating this all the way back, even from when we dug into this fair value gap, so a couple weeks ago. And to make note, this is the inefficiency or fair value gap that we reacted off of. So you can see this week, we dug down into the premium end, the high of the fair value gap, and we since have expanded away from it. Looking at the daily time frame, let me go ahead and get the targets out here. So this old high here is the kind of next draw on liquidity for me. I don't see anything else for me to really look at. This was a old civvy, so we extend that out to our right. We're going to be able to utilize that probably in the next couple days, or even looking at this, looking at the bodies. But particularly when we close above it, or since we have, we can utilize that as an inversion level. So if we do come back down into it, we can treat it as support to go higher. This high here is going to get ran. What I'm predicting going into tomorrow is probably a TGIF, because we've expanded so much, and even going into today, we've expanded. And TGIF is, thank God it's Friday, and ICT teaches that the profile, typically price will retrace back into the weekly range 20 to 30%. So for me, when I'm coming into tomorrow, you'll probably see me do this, if I remember to do so, is wherever we're sitting at by the session, we could go a little bit higher. We could, obviously never go back into 20, 30% of the weekly range, but let's just say for teaching purposes, this is where we're at. Let's say we're in the New York session, the open. What I would be looking at is if there's a criteria for me to short back into the weekly range, because this has to do with the concept of power of three, right? You have open, low, and if it sets the high, right? If it sets the high, then we're looking for the closure, which will retrace back into the weekly range 20 to 30%. So it's a pretty consistent model. It does happen a lot, and it's something that I will potentially be looking for tomorrow. There's characteristics and things around it that need to be present for TGIF to be working properly. But for me, if we're getting above a significant old high, especially on the daily time frame and closing out the week, to me that would indicate that we might have a retracement like TGIF tomorrow. So hopefully that makes sense. The inversion is really what I was keying off yesterday, and the reason why I was looking at higher prices still being a valid reason to look for going into today. If you look at the body closures, bodies tell the story, the wicks do the damage. Look at where the bodies are closing. They're closing above the CE, or the equilibrium of that inversion fair value gap. Kind of another thing in here, this wick, I was kind of by myself today looking at price. If you look at the CE of that wick in here, wicks will act as gaps, much like a fair value gap. They're a little bit harder to predict and get right, but it's cool to see as a study. So we dropped down into basically 50% of that old wick, and then we ripped off higher, leaving this fair value gap as a breakaway gap, which is good to see if you're in an extremely bullish market. Today, as I described during the live session, we had fortunately moved significantly overnight during the London session, which I don't particularly love coming into a New York session, because that can provide a very consolidational seek and destroy profile, which we did see today. And I wasn't able to capture this huge long move that I was anticipating, because if we were down here coming into New York and it expanded like this throughout New York, then I would have been able to hold on to the position this whole time. And unfortunately, I wasn't able to do that. I was asleep. So that's part of your rules and your discipline. This goes back to psychology, is discipline is a bitch sometimes. It's part of trading, and it's part of life. Sometimes you're going to miss out on a move that you completely were expecting and anticipating, and it is what it is. You can't do anything else but just record it in your journal and move on to the next day. That's it. There's nothing else I can really say. And keying off of the idea that we dropped down into this reclaimed fair value gap here, taking out sell side liquidity. There was bullish SMT divergence, and then we expanded off higher. So moving into today in the live session, I was annotating how price was probably going to be low probability, and that was due to numerous reasons and factors. A, we moved significantly overnight, and this has to do with even previous days or previous sessions. If you've expanded a lot a previous day or a previous session, it can lead to the next day or session being consolidational and very low volatility in general. B, we had a decoupled market with ES and YM kind of doing completely separate things than NQ, and dollar index not willing to move lower, which is an inverse correlation with NQ. So I already knew going into the session today, it was probably going to be low probability. And I'm happy that I was able to sit through that entire session live in front of everybody and explain that and see it unfold in real time. I think that's the coolest skill set. I think that skill set alone is far superior than knowing any entry pattern uh, that ICT has ever taught. And I think he would say the same, because if you're able to predict when to stay out of the market, it will save you so much more money than knowing when to get into the market. So if you weren't there during the live stream today, before the open and basically during the open, we were resting underneath the buy side liquidity, which I was favoring. That's really what I wanted price to get up into, but there just wasn't anything in there for me to engage with the market. And that's, again, part of discipline, where if I know where price is going, but my entry pattern doesn't form, I can't just go into the market. I can't just force my hand, because that's basically saying 100% guaranteed it's going to go to the buy side liquidity. Even though with all my experience and knowledge, I very much favored the buy side and I was in favor of it going higher today, there just wasn't anything in there for me to get into the market, nor is it a guarantee. It could have very well dropped off lower today, and I would have been happy just as well as today, where I didn't engage with the market. So you can look at the opening range in here, even on a 5-minute time frame. It's extremely sloppy. So this was the open, and we've just traded back and forth basically for an entire hour before we were able to get up above the buy side liquidity. And at that point in time, there was a lot of sell side liquidity resting underneath price, which before I left the live stream, I said, watch the pre-open lows and even the open sell side liquidity, because more than likely that was going to get ran. So once we got above the buy side liquidity, we dropped down again to expand once more. So even inside of all this mess, I couldn't find any reason to go long, particularly. I'm not sure if ICT posted it to YouTube or not. I haven't checked, but he sent it in our charter membership group where he was able to go long in here. And to me, I never compare myself to ICT nor his experience, because I don't have enough experience to get into that type of move, nor do I really want to be a part of it. I think that would be draining a lot of my mental capital and energy to sit through something like this where it's fairly uncertain, moving back and forth. That to me is a little too much. I'd rather just wait for a move that's a little bit more low resistance liquidity run, where it's just one-sided, clear, easy. That way I'm not draining myself. But once we got above the buy side here, so we have, if you look at the kind of pattern in here, and this will be used in a lot of days of the week, where you're constantly running out buy side liquidity and just going above it. So we have basically 4 drives. We have once, twice, 3 times, 4 times above buy side liquidity. And then you can see we drop off lower to target the sell side liquidity. So in here, I didn't engage with the market, but I was studying it after the live session. Is when we displaced lower, what is this last on close candle? It's a breaker. We have a high, a low, a higher high, then a lower low. So this last on close candle will act as a bearish breaker. And what's resting right inside of that bearish breaker is a fair value gap. So we have one resting right there. And if the market is in a hurry to get to a pool of liquidity, it's going to leave these premium fair value gaps as a breakaway gap, especially with a breaker. Breaker is majority of the time the reason why fair value gaps are left as a breakaway gap and not returned into as a premium or a discount. You can see in here, we dig up into the breaker a few times, just reclaiming it, and then we sell off right at this is another macro or window of time. This is going basically at the tail end of lunch. Look at this little macro in time. Pretty neat, isn't it? Whoever says the algorithm isn't real, I mean, I don't know how you don't believe it. But that's why time is so significant in ICT's concepts, because time comes first and then you utilize the concepts. So in here, small inefficiency, we dropped off underneath some relative equal lows, came back up into a fair value gap, then dropped off lower into the sell side here. After that, we've had a huge displacement higher. So today was a really wild day, and I'm happy I didn't engage with any of it. As much in hindsight as you can sit here and say all these things I could have seen where you could have completely destroyed and derailed yourself on a day like today, because I've done it before. But if you go back out to the higher time frame, we have a low, a high, a lower low, then a higher high. So what's this up close candle here? That's our bullish breaker on the 1 hour time frame. And what's residing right inside of that bullish breaker? A fair value gap here, right? So took out buy side liquidity, dropped lower, take out AM session lows, sell side liquidity, and then displaced higher again. So it's clearing both sides of the board for price to be allowed to move higher. If you drop down into like a 15-minute, 5-minute, I know this is a lot, so I'm going to take a few lines away. So that blue box is the breaker, purple is the fair value gap. We drop underneath the sell side liquidity, and then it was basically off to the races to attack the buy side liquidity from the AM session here. Drop down into small inefficiency coupled with this inversion. All right, we closed above it, drops down into the premium end of the inversion, fair value gap, look at the bodies, and then it was just slowly gravitating higher, and even today with the open. So we're probably going to attack 17,165 here shortly. As I'm sitting here, it may do it. Not particularly sure. If you look at the 1 minute, there wasn't many opportunities in here, in my opinion, to really go long. And I think it would have been a hard prediction to call something like this was going to unfold in the PM session where we had this huge, large displacement. I think it would have been a little bit more difficult, but got above the buy side liquidity. We dropped down into this inefficiency there. And if you want to refine that 5-minute inversion, you can refine this one here. Utilize it as support, displace higher, drop into a fair value gap once, twice, and then off to the races. I don't want to make this video super long, but if you could toggle your RTH gap, your regular trading hours, I mentioned this on the live stream. Let's see if I can put it on. I mentioned in the live stream, go back in it. I mentioned when there's a RTH gap that is fairly large in terms of points in its range, what I'm looking at is the 50% to the 25%. So I'm looking at just this area here. If I have a very large RTH gap and I'm in favor of a bullish sentiment, then I'm only going to be looking for 25 to 50% to be reached into before price expands higher once more. I'm not looking for the whole thing to be closed in. If it's smaller in terms of range, in terms of points, then I would be looking for a little bit for the whole thing to be closed in. So that was also in confluence. There was a lot of confluences today. Of course, in hindsight, it's easy, but I mean, another thing here, beautiful. This is the current new week opening gap. We draw right down into that, and then we displaced higher away from it. So I bet on a 5-minute, there was beautiful. I'm still amazed by these concepts every single day. I can't get over it. I can't believe that he teaches these things because it's too good. Look at the bottom closures of the new week opening gap, respecting it beautifully. Inside of the RTH gap, inside of the 1 hour breaker, inside of the 1 hour for value gap, etc. So I'm kind of losing my voice here. I've been speaking a lot. I just want to cover the dollar index real quick because this is kind of key going into tomorrow. Look at the closure of today inside of the fair value gap. We did close outside of it, which I was hoping for, which is a good sign. I'd really need to see a nice displacement lower tomorrow, especially off of the mean threshold of this bearish order block there. So if dollar index can really start moving lower and having some nice energetic displacements to the downside and into the sell side liquidity pool, it's going to make trading NQ and all the other index futures really easy. So I hope you guys enjoyed. Hope you guys learned something. Appreciate all the new followers and appreciation. I will be live tomorrow, 15 minutes before the open. Until then, good luck and good trading, everybody. Be safe.